Hello and welcome to the ISE ETF and Index Outlook for October 15th, 2012. This is Patrick Sresna. As always, we start off with a chart of the S&P 500 using that SPDR exchange rate fund symbol SPY. We have now had an S&P 500 that is rejected off of that 147 overhead focal point, creating what at this point could be a double top. There's further support to the double top kind of storyline because both the Dow and the Nasdaq have already broken those midpoint pivots, and so for the S&P to follow, it would be very natural. And while we certainly have had 4 or 5 days of straight selling and are overdue for some form of a market bounce, there's increasing probability that we have at least seen the short-term high of the market. Now, what will certainly be the big tell is going to be the magnitude of the correction that follows. If we have just a modest multi-week market correction that contains most of the selling even up to the, let's say, 136 to 138 level, then in fact it would probably result in a buy on dip opportunity, and it would only be if there was an accelerated material reversal of the trend we've seen over the last 4 months that would create complications or problems with it. At this juncture, we are cautious. We've been suggesting over the last several weeks that we only felt that was limited upside and that the risk reward proposition was very poor. Nothing has changed from that. We now see that the overhead resistance is material, so we're going to just gauge to see how a market correction looks here and where it will result the move to go. Next here, I want to take a look at the ISE natural gas index, which is symbol FUM. The underlying commodity of natural gas has been doing very well, but many of the natural gas stocks have actually had a lack of follow through in this last push. This is an important tell, because if we don't see any material strength in the nat gas stocks to follow suit with that of the underlying commodity, when the commodity does correct, it would likely lead to further selling in those natural gas names. And so in fact, this is not very bullish the way that they're behaving. And at this stage, if let's say natural gas as a commodity was to top out at 370 or 380 on the upside, and this natural gas index is no better than a retest of, let's say, the 110 to 112 areas, then it is likely that the next round of selling would be a material one that could see even not only testing in that 103 level we have marked off, but we could see go back to 100 or even down to the mid 90s during a corrective phase. Next year, I want to take a look at the ISE Chindia Index, which is symbol ICK, and what we've seen here is material strength over the last couple months as we've made those July-August lows off that double bottom, but we've now fully retraced higher to a couple of Fibonacci retracement zones, and at the same time we have a distinct loss of momentum as there's very little progress being able to be made much higher than this 50 level on the upside. Really at this stage, the more resistance there is up above, the greater likelihood that we will see a corrective pattern, one that is most likely not only going to retest that 47 level focal point down below, but we could even see $45 if the selling was accelerated. More than likely, a sell-off here would most likely lead to a buy on dip opportunity. Finally, I want to take a look at the ISE Global Copper Index, which is symbol ISC, and copper has continued to correct since making that really big pop high off of the Fed announcements. The corrective pattern we've been seeing is continuing to suggest further weakness can be seen probably all the way back down to 320, where all the highs came in during the June, July, and August rallies. At this stage, will most likely lead to a buy on dip opportunity like we've suggested on a lot of other indices, but it doesn't change the fact that it's likely to go lower, even as many as 20 points in the upcoming weeks. That was your ISE ETF and Index Outlook. Thank you for joining me.